Looks like Obama got in trouble with the oil industry, and I was listening to Lindsey Williams, and to tell you the truth, I think the guy is a total crackpot. I'm going to put it right out there. I was being nice about some of the stuff, but I got no enthusiasm for this clown anymore at all. He's a bunch of garbage, and I don't trust anything he says at all. Now, that's my opinion, but I'm going to get on to why Obama got in trouble with the oil elite. And not because he's sitting in a pile of oil. I thought this was kind of a funny picture. But he's not sinking. And he might not be in trouble with the oil elite because he's reversing his position, so he might be reelected. Lindsey Williams says he's in trouble and he might not, his election's in jeopardy. And Lindsey Williams erroneously states that Obama was just doing the will of his Muslim friends in OPEC. No, he's not. He's doing the will of his Jewish friend, George Soros, because Soros has, well, I guess one reason might be speculative, that he has a financial interest in some equity in Brazilian oil companies, so he'd be able to sell the United States oil in lieu of the United States not being able to supply its own domestic oil from the Keystone Pipeline, or coming down from Canada, or coming down from Alaska, and also maybe from Buffett, which he would benefit from owning a railroad that could transport the oil instead of by pipeline. He could be doing it by rail. And I'm sure there was some pressure groups about from the EPA. Now, Soros doesn't like to see the United States strong, and Soros is the guy that put Obama in power. But let me put it this way: Obama is getting knocked around 50 million different ways, and yes, the oil industry's twisted his arm and told him that you will approve the Keystone Pipeline. He did part of it. He improved part of it, and he will do the rest. But it's nothing because he's got Muslim friends in OPEC. That's ridiculous, and that's what Lindsey Williams says. Whatever he wants to say, fine. He sells the DVDs. Whatever he does, fine. Now, cut right to the chase. Lindsey Williams says the big problem is not going to be the euro falling down, which is a 180-degree reversal from what he said before. And he says the stock market won't crash in January, February, March. And I said it wouldn't crash in October. And all these news writers were saying it was going to crash in October, November, December. And I said it wasn't. It's not going to crash in April, May, or June. But what's going to crash later is the derivatives market. Well, big surprise, hello. You know, they've been saying this for a couple of years, right? The derivatives market is many times the size of the entire global GDP, gross domestic product of the entire earth. And it's controlled by 5 mega banks. Let me just go over this real quick. According to, this is what he says. Now, let me put it this way. Marc Faber says the same thing. Warren Buffett says the same thing. Now, Warren Buffett, I personally like Marc Faber better than Warren Buffett, but Warren Buffett is not stupid. He says you should have companies that produce income. He's not too big on gold because gold basically sits in a safe. It's like to protect money. Most people with a hell of a lot of money aren't going to be interested in buying big bricks of gold and shoving them away for posterity. They want to know how to make more money. They want income-producing businesses. What do people need? Well, if people think they need gold, guess what? I'll buy a gold mine and I'll sell it to them. How's that? You know, it goes to $2,000 an ounce. It goes to $3,000 an ounce. I'll keep selling it to them. Here you go, middle class. And that's how the wealthy is going to get more wealthy. According to many top financial analysts, this is about the derivatives market. And I was being a little bit of a wise guy with that, with the gold thing, because I think the gold is a smart thing. It's going to protect against financial collapse. Yes, it is, but like I said, for real, it doesn't really produce anything. It just sits there like a rock. If somebody wants to buy it for double what you paid for it, then you're going for it. But you know what you're exchanging that for? Fiat dollars. Anyway, according to many top financial analysts, the $700 trillion financial derivatives market may be the time bomb waiting to explode with catastrophic consequences. Now, Marc Faber says this. He says this. He's been saying it. 700 trillion, and some say it's 1.2 quadrillion, or 1,200 trillion, is more than 10 times the GDP of the entire world. So some estimates it's 15 times the GDP of the entire world. And that's the equivalent of $100,000 each for each of the 7 billion inhabitants of our planet. Considering that if you figure this to be 1.2 quadrillion, that'd be $150,000 for every person alive on the planet. These financial instruments have a legitimate place in hedging risk, yet the recent explosion of growth in the global derivatives market has created a huge potential for massive instability. And you know where you think this is going to blow up is at the end of the year or something like that, maybe 2013. According to the most recent report from the U.S. government's Office of Controller of Currency, OCC, the total derivatives has increased approximately over 10 times since 1996 and 2.5 times since 2006. Derivatives continued their rapid climb even in the midst of global recession that started in 2008. Most disturbing is the fact that 95% of all U.S. derivatives are monopolized by just five mega banks and their holding companies. So this is probably what's going to... But you know what? If it's going to blow up, they got to plan how it's going to blow up. Now, Lindsey Williams says the money you need to keep are American Silver Eagles, only U.S. minted coins, or gold coins prior to 1933. Well, that's nice, but you know what people can do too? I say the nickels. You know why? Because it's a U.S. minted coin, and if you're going into hyperinflation, you want a denomination that you can give in small amounts. This is the perfect thing. Nickels. Right now they're worth 108%. They're already worth 8% more melt value than they are face value. Can't lose. It's American minted. And you know what? Money can be anything. Money can be paper. Money can be local currency issued by a local municipality. It doesn't have to be a currency. It could be like a little bond or something that people are trading amongst each other for some kind of goods. And actually, local currency has done a lot of good in economic downturns. But I don't have a lot of faith in what Lindsey Williams says at all. I think there is going to be some type of market crash or something like that, and I think it's going to be in the stock markets too. There is going to be a downturn, and I think there's going to be a downturn short term here in the metals, and that's the way I'm betting financially. I don't know, I could be wrong, but I don't think Lindsey Williams has very good information anymore, and I'm not trusting what he says at all. Marc Faber does say about the derivatives market is going to be one of the big problems. Also, Warren Buffett says the same thing. Marc Faber says to buy gold. Warren Buffett isn't much into gold, but you know what? He likes a company that produces, say, like agriculture, like it produces food, or he's in the oil. He's in a Canadian tar sands that produces oil. He's more in companies that produce something, so you have something always to sell, and you always have a steady income stream. So I kind of agree with Warren Buffett says in that way. He's correct. He is correct. And, you know, like Marc Faber doesn't say to buy, 50% gold or 75% gold. But I did find something interesting he said, and it was not his advice per se, but, Marc Faber has increased his gold holdings quite a bit. I think he's up to maybe more than 25% in gold equities and gold and stuff like that. And I don't think he has any silver, but he's got the precious metals. He stated one time that many of his more wealthy Jewish friends were primarily into precious metals, and I think that is the right place to be, because they are gonna, Lindsey Williams says this, they're gonna wreck the whole system by debt. And the one thing not to hold, and Marc Faber says this too, is government bonds. That you're better off holding equities versus government bonds, because even if the equities might go down, they're not going to go down to zero, because you got a share in a company that's producing something that's essential. But in the case of governments can default and they can go to zero. So he says, so I agree with that about the bonds. That makes a heck of a lot of sense. But I don't know, this Lindsey Williams guy. I don't know what the heck kind of angle. He's a scammer. That's what I see him as. I see him as a total scammer. I don't see the guy as legit. And I think he was getting some good information from Ken Fromm, because he just flat out stated what the oil prices would be when nobody expected it to happen, when it went up and when it went down. Now, I think I can make a better prediction on oil than he could right now. And I don't know nothing special. I'm just going to look at the actual world events and what's going on in the market. I kind of hardly doubt oil is going to go below $100 a barrel, and they're going to attack Iran someday pretty soon. And even if they don't attack them, there's going to be some scare that they're going to attack them and oil is going to go up. So I'm holding position. Not listening to this guy at all. But as far as having only to use U.S. minted coins, like you have to use American Eagles or something like that, I don't know. That might be the case in some instances, but the way I look at it, silver is silver, and it's to me that doesn't make any sense. But if I was to use like survival money, I think the best thing to use is these nickels. These would be the perfect coinage to use. You wouldn't want to spend the silver for survival money. You'd want to use this stuff right here. You'd use the nickels for buying food or whatever the hell you got to do. I would not. And that would only be if they're worth like 10 times. Like, in other words, a nickel is worth 50 cents. That would make a lot of sense. Otherwise, I would not exactly go by what Lindsey Williams says anymore. I don't like what his advice is anymore. I think it's a bunch of garbage. He's been changing his mind too much. And he's made a number of wrong calls. About the price of silver being $75 to $100 at the end of the year. That was a wrong call, and actually we saw that Eric Sprott was selling off, and PSLV insiders were selling off silver in August. Sold off in early September. They also sold off right before the big crash in April 28th. So whatever information Lindsey Williams is getting now, I think is a bunch of garbage, and it's basically right. But I get better information from Marc Faber, or even from Warren Buffett, for that matter, and I think the derivatives market is the big thing to watch. But when this crashes, the stock market's going to crash too. There's going to be a lot of things crashing. But he's not telling you anything specific. It's a big bunch of drama. So I can't tell anything from what the hell that guy's saying at all. But Marc Faber gives you better advice.